And look, de-dollarization isn't just a fun, multisyllabic word you mumble when you've had too much Pinot Grigio at a terrible dinner party to sound smart. It is not a fringe Reddit conspiracy theory anymore. It has started. Countries are moving away from the US dollar right now. The global supremacy of the dollar, the magical green paper that lets us buy cheap electronics and act like absolute monarchs at European hostels, is slipping. And the man you're about to meet is moving his money because of it. And he didn't just give me some vague, generalized advice like a financial advisor who desperately wants to get to his 3 p.m. tea time. No, he told me exactly where he was moving his cash, real percentages, his actual literal portfolio. He's a licensed attorney who has never worked a single day as a lawyer. Why? Well, because he looked at the US tax code, a document seemingly drafted by a cabal of corporate lobbyists and an angry, caffeinated badger, and realized that a standard W-2 paycheck is essentially a financial wedgie. The system rewards investors and punishes employees, and so he opted right out of the courtroom. Millions of people now follow his financial breakdowns every single day. So naturally, I asked him what he's buying while the dollar loses its grip on the global economy. And he didn't dodge the question. He opened the books, and inside, only 2% gold. The man watching de-dollarization as close as almost anyone alive barely owns the one thing everyone screams at you to buy when the economy gets weird. And when he explains why and where the other 98% actually sits, it's going to completely rearrange your brain furniture. It's like finding out Gordon Ramsay eats Hot Pockets for half of his meals. It defies everything you thought you knew. But it gets worse, because he says de-dollarization is just the first of 3 massive macroeconomic shifts moving money right now. The other 2, they are aimed a lot closer to home, right at our collective domestic throats. And I want to thank Chapter for sponsoring this episode, and more on that later. But right now,
this is the Epic Real Estate Podcast, contrarian takes on money, housing, and policy without the guru nonsense.
Let's go, let's go, let's go, let's go, let's go.
Let's go.
Please help me welcome to the show, from Minority Mindset, Mr. Jaspreet Singh.
Well, thank you for having me on. It's really a pleasure.
Yeah, it's my pleasure, really. I've been watching you for so long. Big fan. Let's start. I know you really predominantly just as a YouTuber. I don't really know what your actual background is and what you do for a living and how you got here. Could you share that real quickly?
Yeah, I think there's 2 parts to that. One is, how did I get here and what do I do for a living? Which I think they're 2 very different things. So I don't have a financial background or a traditional financial background. I grew up in a traditional Indian house. My parents are immigrants from a state in India called Punjab. And growing up, I wanted to be successful because I saw how hard my parents worked. And so my dad and my mom both, they gave me 2 options. They said, Jaspreet, if you want to become successful, it's very easy. You also have no choice in this house. So option 1 is you can be a doctor. Option 2 is you can be a failure. You pick. So growing up, I thought that I was going to be a doctor, and I was trying to do everything right. I studied hard in school, got to a good college, and I was checking all the boxes. But then I started to learn about financial education, and I learned there's a big difference about becoming wealthy and getting a good job. And that difference was something that I was never taught before. And I got really upset because I was spending all this time thinking I was doing everything right to become successful, but I was not becoming financially successful that I was doing. You can make a lot of money as a doctor, nothing wrong with being a doctor, nothing wrong with getting a good job. But there's a difference between your career, your job, and your wealth. And that differentiation was something that really made me upset, because we think that the way you become successful is by getting good grades, getting a good job, and then that's how you become successful. But if you look at the wealthiest people in the world, that's not how they do it. They don't try to climb the corporate ladder, they own the corporate ladder. And that was this whole concept that really took me down a different path. I'm now starting to learn about money, starting to learn about investments. So when I told my parents I'm not going to be a doctor, they were very upset. And so my dad and I made a compromise. I said, I'll go to law school part-time and I will work on what I want to do full-time. And so I started spending all of my time involved with studying investing and investors and all this other stuff. And I was very fortunate now to be able to then go out and graduate law school, but I never had to work as an attorney. I didn't need to, because I was seeing success with what I was doing. Now your question is, well, what do you do now? A lot of people know me, like you're saying, for what I do on YouTube, because I host this Minority Mindset channel on YouTube. But that is what I call my hobby. I have a full-time job, which is I am a CEO, and I started my company, Briefs Finance. So I run Briefs Finance, We are a financial technology company. We used to be a media company. In 2025, when I started to see how smart AI was getting, we pivoted the company to a financial technology company. So we still have some media products. Like we have a free newsletter called Market Briefs, where we break down what's happening in the markets in a quick 5-minute newsletter. It's read by hundreds of thousands of investors every single morning. So we still have that Market Briefs newsletter, but now we've built a number of technology tools to help investors find better investments. Because one of the things that I learned is that anytime something happens in the economy, like President Trump, for example, just recently ripped up a trade deal between Mexico and Canada. When people hear this, they get very emotional. Some people get very excited. Some people get very angry. But Wall Street doesn't get emotional. They get rich. And the reason why they get rich anytime this happens is because they study where the money is moving. And that level of research has always kind of been reserved for the people that are very wealthy, the elites. That was what I wanted to make accessible to the average person. So Briefs Finance now has a bunch of tools and stuff out there to make Wall Street level research available to regular people. So that's what I do now.
You said something there that it sounds kind of similar. Like I didn't have professionals and doctors in my family. I came from really a blue collar family, a lot of police officers and people in the fire department. And, they worked at aerospace, engineering, stuff like that. I'm the only entrepreneur in my family.
Let's go.
And there was a turning point, and I heard you talk about it. Maybe you briefed over it, just kind of skimmed over it. But what was that turning point? Not being raised in that environment, because that's where so many people get like their financial education, or where it starts is from their family. But you kind of found something outside of that. What was the turning point for you?
Well, you're 100% right. And whether you grow up in a blue collar family or a white collar family, that doesn't necessarily mean you grew up with financial education. And what you realize is, unless you grow up with rich parents, you're not going to learn it in school unless you go out of your way to figure it out. For me, I read the book Rich Dad, Poor Dad. And that was the first time I was ever exposed to this concept of investing or assets and liabilities. Like I did not know what an investment was, or what a dividend was, what cash flow was, what an asset was. I was so ignorant to all of that. And to me, this was a whole world that I had never heard of before. So when I read that book, now I got hooked. Like English is my second language. But after I read that book, I started reading business books, money books, investing books. And I was like so absorbed into this whole world because I realized that financial education is different than formal education. And formal education gets you a career. Financial education makes you wealthy.
That book was so transformational for so many people. That was my turning point as well. Wow, this is something entirely different for me. Would have never learned it. And I actually started the YouTube channel and my podcast. I've got the longest running real estate podcast ever, I think. At least it's the one that's live still. But I really kind of started to start documenting for my son, so he didn't have to go through what I'm going through. He didn't have to go out on his own, You have kids?
I do, yes.
Are you teaching them, or are you letting them?
Do my best. Yes.
You're doing your best. I can read between the lines there because I have the same thing, I think. So let's dive into it. We are in a very different world right now than probably when you and I first had this epiphany of this difference between wealthy and having a job not being the same thing. A lot has changed. Do you think it's actually harder to get ahead now than it was 30 years ago, or is it easier?
I think it's easier now than before. And the reason why I think it's easier is because of technology. Here's the part that I think is more important to understand. If you don't understand this, if you just try to do what everybody else does, you're going to be further behind. So like the average status quo is worse than before. But for the person that wants to get ahead, it is so much more accessible now than ever before. You want to start investing your money now? Just push a few buttons on your phone or your computer and you can get access to a brokerage. You want to invest in a stock? It's commission free now. Before, it used to be $7, then it was $10, then it was $30 per trade. Before that was like a percentage. So before that, you'd have to call a broker. It was not easy to do. And before that, you'd have to have even more money to even consider investing your money. So investing your money was very difficult. Then starting a business was also more difficult, more work, because you do not have access to the internet, which could connect you to millions of people with the push of a button. And now with AI, you have access to anything you can imagine with the push of a button with AI. So all these tools are now available and they're accessible for anybody. But now the question is, are you going to just try to be the status quo, which means you're going to be poorer than you were before because now people who want to be go-getters are going to have access to these tools and become even wealthier? Or do you want to be the person that's going to go and take advantage of what's available?
I'm sure we can relate on this, being able to read our comments. And we see a lot of hemming and hawing. And, I see a lot of victim type conversation in the comments. See people almost wearing it as a badge of honor in some regards. Knowing what you just said, or taking into account what you just said, what is your advice to that person that's like easy for you to say, Jaspreet?
I mean, yeah. That's fine. You get to decide your destiny. You get to decide the life you want to live. Nobody else does. Right? I mean, it's very easy for me to point fingers and say, the banking system is why I'm broke. The government is why I'm broke. Big corporations are why I'm broke. Everybody else is why I'm broke. But when you're sitting there pointing fingers at everybody else, there's three fingers pointing right back at you. And at the end of the day, you get to decide. And if you don't believe you get to decide, then you're also right. I mean, whenever you believe, you're right. Some people are crazy enough to believe that they're going to become successful, and they're the ones that do become successful. Now, not everyone is going to, but the people that believe they're not going to become successful, they're not going to become successful. That's like 99% of them are going to not become successful. But out of the people that are crazy enough to believe that they can do it, I would say a bigger portion of them are actually going to do it, because now they're going to watch different YouTube videos. They're not going to spend money on stupid stuff they can't afford. They might now spend their free time working instead of partying. They might spend their free time working instead of going on a vacation. And so now all of a sudden, when you start to compound all of these different types of effort, luck starts to play in your favor. Now, I'm not a huge believer of all, good luck, bad luck, but, luck is something that really is partially created. Now, not all luck. Some people are born into rich families. Some people are born with health. Others are not. But if you're healthy, you can understand what I'm saying. You live in a first world country. You are pretty freaking lucky. Now, what do you do with that? Because guess what? If you didn't have to wake up and worry about a bomb dropping over your head, if you didn't have to worry about somebody stealing your house, you don't have to worry about how you're going to eat today. You got things going in your favor. My grandparents were refugees. I told you my parents are immigrants from a state in India called Punjab. Well, the state of Punjab was a lot larger than what it is today. And I'm a member of the Sikh religion, S-I-K-H. In 1947, the state of Punjab was severed. The government cut it into two pieces. And what this said is, if you are a Sikh, the religion that I am, and you were on the west side of Punjab, you have to migrate east or you're going to be killed. And it wasn't the government said you're going to be killed. It was just the riots were that way, that if you're a Sikh and you're on the west side, you were going to be killed. My grandparents now all of a sudden had to pick up and leave. My grandfather left his home with nothing but the clothes on his back and a sword in his hand. Along the way, he got attacked by a mob. He saw his uncle get his head chopped open right in front of him. He tied his uncle on a horse, and that was the last time he saw him. My grandfather made it now to the east side of Punjab, the new India. He lost his sandals, his shoes along the way. He didn't have a place to sleep, was sleeping on the ground. Had no money to help other people or feed other kids that he saw was hungry, let alone had any money to feed himself. And from that, what he told me is poorness is the biggest disease. Because in our religion, the Sikh religion, service, helping others is a core tenet of our religion. He didn't have money to feed himself. How could he help others? And so now, when you start to see that there's a lot of different ways that you can live, if you're living in a place where you don't have to worry about the basic necessities of how you're going to eat, you got a lot of advantages. There's always going to be somebody with more advantages than you. So what are you going to do?
It certainly puts it into perspective. I was listening to years ago, but it's stuck with me ever since. An interview, or not interview, it was just a podcast episode of Alex Hormozi, and he was talking about a conversation he had with his dad. And he was complaining to his dad one day, and he was like, you've got a working brain and two hands, and you live in America. What's your problem? Like, it was just a different perspective, right? You don't have bombs coming over your head.
I've heard many of those stories. I mean, my parents grew up in Punjab, and in the 1980s, the state of Punjab was bombed by the government. And so in the hot summer, over 100 degrees, my dad tells me stories about when they would have to sleep on the roof of their house because there were people going into houses and just killing whoever's in the house. They would go to sleep at night and the sky would be red and orange from bombs being dropped all around them. So yeah, I mean, if you don't have to worry about a bomb being dropped on you and you have two working hands and you can understand what I'm saying and you live in a first world country, you got some advantages.
You got some advantages. Yep. Totally agree. So I listened to your show or your channel, and I think you and I are essentially yelling at the same thing all the time. Might have slightly different advice, but I think we're more aligned than we're not. You know, when you get a scared 62-year-old that's, you know, got the paid off house and, you know, maybe remnants of a 401k, you know, it seems like your instinct is always like to tell people to go on offense, right? To keep buying. That's kind of your mantra as I kind of gathered it. Is that accurate?
Always be buying, ABB.
Right. Always be buying. Mine is a little bit more, especially the distinction there, I guess, is that there are different circumstances, but it's a kind of to dig in and there's a way you can play defense really aggressively and make it work for you. Why is offense still the right call for someone who's basically done accumulating and just can't afford to lose?
Well, it depends on what your investing strategy is. I like to invest for cash flow. And if you're investing for cash flow, the way that you get paid is not by selling your investments, is by owning more investments. The more investments you own, the more you get paid. And so it depends on the game that you're playing. If you built your wealth, then your strategy is different than if you're building your wealth. When you're building your wealth, always be buying. The way you build wealth is by buying investments. But if you've built your wealth, you're in retirement, it's a very different game now. For example, in Briefs Finance, we're a company. We publish research and we have tools, and everything that we have is built around three types of investors. There are growth investors, the person that just wants to see their portfolio go from $100 to say $200 or $1,000. Mm-hmm. The income investor who wants, I invest $100 and I'm making, $5 in cash flow every year from that. And then there's the wealth preservation person, the person who's 62 or 75 who does not want the huge growth. They just want to not lose their money, which you're calling defensive. So you got to know the game that you're playing.
That's very true. So I always kind of default to, depends how old you are, right? Is a big factor. And then I guess secondarily is how far you've come along in your life. So
yeah, but also I think more than age, it's what you want and where you are.
Right.
What was the Colonel Sanders started KFC when he was 65?
100%. Totally.
Yeah, I mean, if you're 63 and you're like, you know what? I never took my finances seriously. I want to start investing. Go for it. Who says you're old now? I mean, go for it. People are living until 100, 110 now. You got decades ahead of you still.
I guess I am.
But you got to know you.
I'm a little more sensitive. I guess I'm not as risk adverse as I think my audience is. So I'm sensitive to that. And I'm empathetic about that. And I don't want them to take a giant leap or take this giant risk based on something that I said or nudged them towards. So I'm always kind of searching for just the diplomatic way to say it and also actually be helpful. So if someone's 62 years old, between 50, 60, and they're a little bit behind, they haven't, accomplished what they wanted to accomplish financially yet. Is it just age is nothing but a number and you just invest? If you're staring down 65 or you're already there, you probably assume Medicare is some benevolent government safety net stitched together by kindly bureaucrats who just want your hip replacement to go smoothly. Well, it's not. It's rigged. The market is manipulated by financial incentives actively working against you. Those friendly agents you see on daytime TV, the ones who magically appear on Google the second you search doctor near me, they are not your friends. They are bounty hunters for big insurance, like Dog the Bounty Hunter, except instead of mace and a leather vest, they've got a toll-free number and a burning desire to lock you into an out-of-network nightmare. And it gets worse. They aggressively push Medicare Advantage plans onto you even when those plans are disastrously wrong for your medical needs. So you got to think, why would they do such a thing? Well, because insurance companies pay them massive commissions to do it. They will jeopardize your access to a life-saving specialist so they can put a down payment on a jet ski named Advantage This. That's why I partnered with Chapter. They flipped the script. Chapter is the only Medicare advisor that searches every single plan nationwide. Their advisors get paid the same no matter which plan you pick. Zero agenda there. So if you're already on the right plan, they'll just tell you. Like a mechanic who looks at your engine and says, hey, your transmission's fine, you just needed to tighten the gas cap. Shocking, I know. But if you're not on the right plan, they'll help you switch. Last year, Chapter saved the average senior over $1,100. Oh, and one more thing. The original Medicare bill, LBJ, signed in 1965, that was 135 pages. Today, the rules and regulations are over 130,000 pages. That's 100 times the length of War and Peace, with a significantly higher body count. So, do not try to read 130,000 pages of bureaucratic red tape, and do not trust a TV bounty hunter trying to buy a boat with your premiums. Go to auditmycoverage.com. I'll put the link below in the description, or just scan the QR code that you see right here on the screen. Or if you just want to get right to the point, call Chapter right now at 971-247-4358 and let them run the numbers. They'll do it for free and get back your peace of mind. Now, let's get back to it. Is it just age is nothing but a number and you just invest?
Well, you gotta be real with where you are. If you're 55, you want to stop working at 65. How much money do you need to stop working? And there's two ways to determine what the number is. Option number one is you could say, I need $10,000 a month, hypothetically. Option number two is you could say, I need $2 million. Which one is it? Is it I need a certain amount of income, or do I need a certain amount of assets? If you need $2 million, now the question is, how long will these $2 million last you? And what many people say is follow the 4% rule, which is you can sell essentially 4% of your assets every year. So if you have $2 million, you get $80,000 a year. That's the general rule of thumb. So figure out how much money you need, and now how far away are you? If you need $10,000 a month in income and you have $8,000 a month in income right now and you have 10 years to get it, you're not that far away. If you are needing $10,000 a month in income and right now you have $44 a month in income, you better get more aggressive. You have to take on more risk. You have to figure out how you're going to bridge that gap. I think a lot of people, they want it's okay, it's going to be just fine. Well, sometimes, you need a kick in the butt and realize math and dollars are not emotional. It doesn't care how old you are. It doesn't care how hard you worked. It doesn't care whatever you feel. It is what it is. And so there are many ways to now figure out where you need to go. You can go to any calculator on the internet and figure out what your wealth number is, and now figure out how far you are away. And if you need more, you got to be willing to take on more risk. I mean, there's three things that will determine how wealthy you become: how much money you invest, how much time your money has to grow, and the rate of return on your money, period. There's nothing else that will determine how much wealth you have. And so either you can invest more money, you can give your money more time to grow, or you can get a better rate of return. And now you determine what are you going to do in order to be able to grow your wealth.
There's so many people sitting on their 3%, 4% mortgages. And now that I know that Rich Dad Poor Dad was the big pivotal book for you, I imagine we're probably come from the same school, that there is good debt out there. And based on that type of long-term fixed debt at these low rates that we have, and inflation doing what it's doing, we know the long-term math is going to work on our favor by holding on to that debt. Where do you draw the line there for someone that is kind of thinking, should I invest extra money and pay off the house, or should I hold on to the mortgage and invest the extra money?
Yeah, so actually, I've met with Robert Kiyosaki multiple times about this, and who's the author of Rich Dad Poor Dad. Him and I actually kind of disagree on this. I think all debt is bad debt. People misinterpret what I say when I say that, but let me clarify. I don't say you shouldn't use debt, but if you don't treat your debt as bad debt, what you think is quote unquote good debt, if you don't nurture it, it's going to turn around and bite you in the butt. And it's going to turn nasty really fast if you don't know how to use it. And so this is where it's very clear, like you're talking about good debt versus bad debt. What people say is they're talking about consumer debt versus business debt, assets debt. Now, I am not a fan of any sort of consumer debt. I don't like financing cars. I don't like the idea of financing vacations, financing sofas. I think that's all stupid. If you have credit card debt, the first thing you need to do is pay that off. And the reason why is, let me give you a simple scenario. If I give you $8,000 right now, and you were to invest the $8,000 today, and you never touched the $8,000 ever again, and you never invested another penny, and your money grew by 20% a year, your $8,000 is going to grow over the next 40 years, not to $100,000, not to $500,000, not to $1 million, not to $5 million, not even to $10 million, but to $11 million. Now you're going to hear that and say, okay, Jaspreet, that sounds great. I can find $8,000 somewhere. Where do I get those 20% returns? And the reality is you are not probably going to get those returns, but do you know who is? Amex, Visa, MasterCard, Discover, and you're the one that's paying it. The first thing is you got to pay off the credit card debt, because that's the money that you're putting in their pocket. You're working hard to make them rich instead of making yourself rich. Now, as you start to allocate your money towards your investments, you got to make that decision. Well, what am I going to do with my money? Am I going to invest in stocks? Am I going to invest in real estate? Am I going to invest in gold, cryptocurrencies, private equity? Or am I going to pay off my debt? And the first thing is you want to take a look at, well, what type of debt do you have? How high is the interest rate? And the first thing I talk about is if it's a double interest rate, double digit debt, 10% or higher, pay that off first. But now when we talk about a mortgage at 4%, when the stock market has averaged 10% a year, the question starts to become a little bit different. Or if it's a car loan at 6%, while the stock market has grown by 10% a year, it's a little bit different. Now, I don't like consumer debt, but you have to make that decision now of what's right for you depending on where you are in today's economy. Because the stock market has averaged 10% a year, which means sometimes it goes up by 20% a year, but sometimes it goes up by 3% a year. Sometimes it goes down by 20% in a year. And you don't know what's going to happen over the next year. But when you pay off the car, it's a guaranteed 6% return. When you pay off the house, it's a guaranteed 4% return this year. So it goes back to knowing where you are on your financial journey. If you're somebody who says, I don't want to worry about money anymore. I'm done stressing about money. I hate worrying about my bills. Well, then paying off that debt is going to give you a lot of that relief. If you're somebody that says, you know what, I want to be rich. I want to fly first class. I want to stay at the nice hotels. Well, now you got to be willing to take on some more risk. And that's where now you can start to make that decision for yourself. Then you can also take a look at, well, what is your experience level and how involved are you with your investments? If you say, I don't even know what the stock market is. What is a brokerage? Well, the simplest place to start investing is just pay off some of that debt as you start to learn. There's no one size fits all. I say personal finance is personal because what's right for you is not right for me.
So I get that, and it's all totally logical. And I don't disagree with anything that you said. Now, when you go and take into account what our dollar is doing, what the Fed is doing, what the inflation is doing, how do you factor that in, or do you at all?
I mean, at the end of the day, that's why you want to invest. Now, again, let's do the math first, then we'll talk emotion, because you have to understand both. I buy a $500,000 house today with a 6% mortgage. Well, that 6% mortgage or 7% mortgage is locked in. Inflation, I don't know what that is. Right now, it's 4.2 or whatever percent. Is it going to go up to 5, 6, 7%, or is it going to go down to 2%? We don't know. We know the government's going to keep printing money. We know the dollar is going to keep losing value. The house will hopefully go up in value. And if you can get a mortgage on it, that principal, the added equity, is all yours. But that debt comes with risk. And so now you have to value in that risk with whatever it is that you do. The way you beat inflation is by investing your money, period. Debt amplifies whatever you do. So if you're right with your debt, if you finance real estate, you get to make more money. And it has helped some people become incredibly wealthy. Donald Trump is one clear example of that. If you are bad with your debt, you don't know how to invest your money, you make bad investments, well, screw inflation. Not only did you lose your money, but you have to pay that money back plus interest. So now you got screwed with inflation, you lost the investment, and you lose the interest. So debt amplifies risk. Risk can help you make money. If you don't know how to do it, you're going to lose even more money. You have to know yourself, and that's where, starting off, avoid that debt. Once you know what you're doing, if you know how to invest in real estate, you can see what you're doing, use debt to amplify what you're doing. If it's knowing where you are, starting a business, and if you take on a big loan as soon as you start and you don't know what you're doing, well, most businesses fail. And if you don't know how to go about it, you might lose even more. I remember years ago, I walked into the bank. I needed to, do some business there. I was talking to the bank manager, and he was telling me he was having this tough time because a lady came in and she wanted to buy this dog grooming business for $65,000 or something like that. And he was like, the problem is the business is losing money. There's no IP. They don't own any real estate. She just wants to buy the business. Well, the owner could go and open up a business, the same dog grooming business, right on the other side of the street. There's nothing stopping him. There's no special protection. All she's doing is selling some random dog grooming stuff, and she's paying $65,000 for it that she doesn't have. Well, the bank, they get paid as soon as you sign the paperwork. They don't care if you can turn that business into a profitable franchise or not. They are not business advisors. It's up to you to decide if it's a good business. And if you have no experience doing it, you got to understand that life is the best experience and life can be painful. So avoid debt until you know what you're doing.
Yeah, that's a good point. It's really in the education of the operator, whatever you're using the debt for, right? So if you're going to real estate, for an example, and people have expressed many headaches and loads of comments under my videos over the years, tenants are a headache and they tear the place up and da-da-da-da. It was like, well, you got the wrong tenants in there, right? There's plenty of people that have done very, very well with real estate. And just because you had one bad experience, maybe it was the operator and not the actual investment class. And you could draw that same thing to wherever you're going to use the debt, you want to be an educated operator.
Yeah.
And I know you've said something like that. I have some notes over here about being the educated investor. You always say that the system rewards the financially educated and it punishes everyone else. So can you kind of maybe articulate a little bit more on that and get some specifics? Like, what are the legal, boring, totally available moves the wealthy use that the average person just hasn't been told about?
Well, there's three laws of money, 3 rules of money that we should have all learned before we graduated school. Number 1, the spending benefits the investor. When you go into Chipotle and you spend money, who gets rich? It's not the workers at Chipotle. It's the owners of Chipotle. Well, who owns Chipotle? It's the investors of Chipotle. Because the workers get the salary, but all the additional dollars of profit go into the hands of the investors. Rule number 2, inflation benefits the investor. What happens with inflation? Well, now your extra guac and your extra meat in your Chipotle bowls just got more expensive. So now you go to Chipotle, you don't get the bowl for $5.25 anymore. You're paying $12 for that same bowl. And so now when you pay those extra dollars, a little bit goes to the workers because people have seen some raises over the last 5 years, but most people's raises, the average person's income has not kept up with inflation. So where do all the extra dollars go? Oh, they go into the hands of the owners, the investors of Chipotle. So inflation makes the investor richer. Rule number 3 is our economic system is designed to make the investor richer. How do I know? Well, I told you I'm an attorney. Spent a lot of time studying the tax law. And what the tax law tells you is that everybody's income is not taxed the same. If you work a job, you are getting what's called earned income. And that earned income comes with the highest tax rates and the lowest tax breaks. If I go and become a doctor and I make $1 million a year because I'm a top surgeon, I've worked my butt off, my top federal tax rate is almost 40%, 39%, plus state tax and all that other stuff. But if you add in FICA taxes, we're looking at about 50% of my money is going straight to taxes as a doctor. If I go and earn the same $1 million as an investor in the stock market, my top tax rate, the top tax rate is 20%. If I go and make the same $1 million in real estate, I might pay 0% of the money in taxes because of depreciation deductions, because of the 1031 exchange deduction. So it's not how much money you make, it's how much money you keep. But the investor is the one that gets to keep more of their money, not the employee. Why are we never taught that?
Things that make you go, right? The system, it doesn't work without the people that don't do it, right?
The system is designed to keep people poor. It's very unfortunate. That's the way it works. Banks profit when you're financially stupid because they get to keep you in debt. Banks profit when you are in debt. Corporations profit when you spend your money. The more money you spend, the richer they get. You spend money with debt, they get richer. The government profits when you're financially stupid because now you pay the highest taxes. The people who pay the highest tax rates are employees, not investors.
Yeah.
You profit when you're financially educated.
The expression, don't fight the Fed. Do you agree with it? And if you do, how are you aligning yourself with the Fed these days?
If you've been grinding for deals and coming up empty, you're not alone. That's why we created a way for frustrated investors to finally get cash flowing income property without the hassle. Go to frustratedinvestor.com. And now back to the show.
How are you aligning yourself with the Fed these days?
Well, I follow a simple strategy. We talked about this earlier. ABB, always be buying. Here's the reality. Markets go up, markets go down. Markets can be manipulated, period. When people say don't fight the Fed, what that means is the Fed can open up the money printer and pump up the markets. And we've seen that happen. Take a look at 2020. 2020, the market was going through the fastest stock market crash that we have seen since the Great Depression. Then the Fed opens up the money printer and we saw the fastest stock market boom in the history of time. So think about that. In the same year, We went from the fastest stock market crash in the history of time to the fastest stock market boom in the history of time in a matter of months. So this is where people say, don't fight the Fed. My philosophy is very simple. Always be buying, because we don't know what the Federal Reserve Bank is going to do. And people can predict and try to guess it. And when they say don't fight the Fed, that means just keep buying investments. And generally, yeah, always be buying. That's what I mean. But sometimes the Fed also screws things up. And so when people just try to follow what the Fed does, sometimes the Fed can be wrong. And they've been wrong many times. And so I don't try to follow what the Fed does or try to just chase what the Fed does. That's trading. I'm just buying investments. Take a look at what the Fed did in the 1970s, in the early 1970s. 1971, President Richard Nixon takes the dollar off of the gold standard. Money starts to be printed. Inflation is at 4-ish percent. 1972, Richard Nixon's up for re-election. And all the election stuff is happening. And he says, we need to do lower interest rates. We need to put a lot of pressure on the Fed to cut interest rates, despite the fact that there's a lot of money printing happening. Inflation fell to around 3-ish percent in 1972. But the Fed listened. Arthur Burns, he was the chairman of the Fed then, cut interest rates, stimulated the economy. Then what happened? Well, fast forward towards the end of the year, and now inflation went from around 3 or 4% to 12%. It tripled. And now the Fed had to come in, the new Fed under a new chairman by the name of Paul Volcker. He jacked up interest rates, not to 5%, not to 10%, not to 15%, to about 20%, causing pain in the economy, pain in the stock market, pain in unemployment, as a way to save the dollar, as a way to save the economy against inflation. So yeah, I mean, you can follow the Fed and do all that, but at the end of the day, I follow a very simple philosophy. ABB, always be buying.
So always be buying. I think, and you can correct me if I'm wrong, that you lean a little bit more towards the stock market. I lean a little bit more towards real estate. What's a good balance there, do you think?
I wouldn't say I lean more one or the other. In fact, I think I own more real estate than I do stock. Actually, no, I'm pretty sure I own more real estate than stocks.
Okay.
Stocks are more accessible. Real estate is a lot more hands-on. Now, I don't manage my real estate. I have a manager that does it. But buying a property is a lot of work, even though I have a great team. It took me years to build a good team, but still buying a property is a lot of work. I got to look through properties. I got to walk through the property. I got to go through the legal process and do all that work. It's a lot of work.
Yep.
Versus buying a stock, it's a few pushes of a button. And now with AI, it's become even easier. I'm going to release something to you that we've been working on in the back end. I've never told anybody about this publicly, but guess what? We have built and are building tools to make investing a lot more automatic with our AI, because our AI understands our investing methodology. And then you can understand your investing methodology, what it is you want to invest in. Then you can just set the rules, and now your money can be invested automatically. It's so much more accessible with the stock market. I believe in diversification because I want to protect myself against myself. And that's why I diversify. Now, for me, diversification is investing across different asset classes. So I invest in my own business, briefs, finance, real estate, stocks, speculative investments, that's startups and crypto, and then gold. 2% gold, 18% speculative, 30% stocks, 50% real estate. So that's what I do. I don't recommend what I do to anybody else, but you got to find what works for you. Start with one first. The mistake that people make is, I bought one stock, I'm going to buy one real estate. Start with one thing. Get good at one thing first, and then you can look at what's next.
Yeah, that was actually my next question was gold. How does that fit into your mix? So you said 2%.
Yeah, I don't look at gold as an investment.
Me neither.
I look at gold as a way of saving hard money. I don't care about what the price of gold is. I mean, it's just an insurance.
Any fear or predictions or concern about the value of our dollar?
I think there's obviously risks to the dollar. Like what Ray Dalio says, every empire has a start date and an end date. Every human has a born date and an end date. It's a matter of when. And so, yeah, there's obviously risks to the dollar, but we can't control what's happening outside. All we can control is, well, how do we invest our money? And how do we find opportunity with it?
So you don't really have an opinion? You're not preparing for that or hedging against that or just in case type movements you're making?
My investments are built in a way that I want to be able to win no matter what happens. And anytime something bad happens, I think there's opportunity. I own international investments. I own real estate. I own some gold. When bad things happen to the dollar, those can benefit. When I also believe, I'm a strong believer in the American economy. The American economy is booming. I have other investments that benefit from that too. So, it's just, bulls, there's a saying, bulls make money, bears make money, pigs get slaughtered, which means it's the people that get greedy, they're the ones that lose. So, there's ways to make money if you believe the American economy is going to boom. There's ways to make money if you believe the American economy is about to collapse. It's just the people that get greedy and don't really manage what they're doing. They're the ones that lose. People that get very emotional.
So when it comes to always be buying, what are you excited about right now? What are you buying more of than you normally would have or more have been in the past?
I've already kind of went over the different things that I'm buying, the different asset classes, but I like to look for shifts because I think there's 3 big shifts happening right now.
Mm-hmm.
Shift number 1 is de-dollarization, like you've been talking about. Shift number 2 is economic concerns with our national debt, with AI changing the economy, with inflation. And shift number 3 is about how our economy is going to respond with the changes at the Federal Reserve Bank. Each one of these changes, shifts, mean money is going to move. They all create opportunities. I mean, with de-dollarization, understanding now which countries are looking to rapidly grow their economies and looking to rapidly compete against the United States. How can you find opportunities there? When you start to think about concerns about the American economy, what are ways that you can find opportunities there? And so it's all about now understanding where the shift is happening and how this can create movements of money. Like, right now, everybody's talking about SpaceX, space investments. I call that investing based off of news. What we did at our firm was last year, President Trump signed an executive order in August of 2025 about allocating more money towards space and exploration. Then he signed the One Big Beautiful Bill Act, the tax bill, that also allocated more money towards space. So we were publishing research to our investors about how we believe that this is going to create an investment in space. So we were buying space investments in August of 2025. Everybody's talking about it in June and July of 2026 after SpaceX went public. So it's investing based off of research, which is what I like to do, as opposed to investing based off of the news.
I've asked you certain things. I'm kind of noticing a pattern, and maybe you just kind of it disrupted my question here. But we talk about inflation. We don't know what that's going to do. We talk about the stock market. We don't know what that return is going to give us. Talk about the dollar. We don't know what that's going to do. At what point are you actually making your decisions? But you kind of maybe just answered it there. But what other types of research do you do where you find that it's valid enough to where you're not really guessing that you're actually making a solid, educated investment or decision?
Well, we find where the money is moving. I mean, you want to go where the money is moving, not where it was.
Right. So that's where I'm getting at. Like, are you just kind of like you wake up every day and you're like, okay, where's the money moving today? Or you think in a year out, 2 years out, like this is where the trend is going. When does the actual decision get made for you? When do you feel comfortable making that?
Well, I don't think there is like a black or white. Everything is kind of a different shade of gray. It's something that we do all the time. I mean, we have a team of analysts. This is what they do all the time. So it's not like today I'm going to invest $50 here or $50 here. Again, I follow ABB, where money is always being allocated towards investments. Yeah. But then when I believe, there's a shift happening that we believe is going to create a long-term investment, then we will invest there. I'm not a trader. I'm an investor. So you want to find a shift, and then you want to find an investment within that shift that you believe is a good investment. And then you want to see when that investment comes a good price. So, there's 3 stages to that. So you find the shift, you find the company, and you find the price.
I like it. Yeah, I was really hoping you had a crystal ball over there, but I guess a dead end.
I don't have that. When you find one, let me know.
One other thing, we'll probably kind of wrap it up with this, but you think you said in the beginning, like, when we talk about politics, you don't get emotional. And I'm very much the same way. I'm looking more like every 4 years, we're going to get a new administration or a renewed administration. We just kind of have to look at what the rules are. And now we got to play by those rules. And I was just wondering if you're thinking about anything in advance with like a growing popularity of a socialist movement and what that brings to certain markets. Have you given that any thought?
Not particularly.
Particularly? Okay. I guess that's another question. When does that start getting some recognition or so your attention when it comes to your money? When you see, say, last week, 3 Democratic socialists with wildly different, they're not even Democrats. They're very, very different mindset. And they're winning. And I'm wondering, when is that going to start coming into the decision factor of what you do with your money?
Again, I don't think it's going to change anything that we do. Every change comes with movement of money.
Always be buying.
Always be buying.
Got it. Jaspreet, it's been an absolute pleasure. Thanks for taking the time. If you don't know Jaspreet, go over to Minority Mindset right on YouTube. If you want to sign up for his newsletter, where should we go for that?
Yeah, you can go to our website, briefs.co, and you can see market briefs there. You can search market briefs on Google. And maybe I can give you a link and you guys can put it in the description too.
Absolutely. Please do. I'll make sure it's below. You bet. Well, thank you, sir. Let's stay in touch and let's do it again.
Beautiful. Thank you so much for having me. It was really a pleasure.
You bet. Take care.
Bye.